Hi, everybody. It's the Plant-Based Business Hour. I'm Elysabeth Alfano. Great to have you with me today. So the Good Food Institute has just put out their report this morning, the state of the industry of the plant-based foods. We will dive into that. Of course, this is on the heels of the World Health Organization and the FAO talking about cultivated meat and just how safe it is. And they've come down with the recommendation that it's just as safe as meat. And then also sort of on the heels, maybe it's a week or 10 days old, but the Biden administration, biotech and biotech manufacturing bold goals for the U.S. Plant-based innovation, alternative proteins, microalgae proteins, et cetera, fermentation and fermented proteins, all in there. So it's nice to see that the U.S. is starting to put its attention on this. So what does all this mean for the plant-based foods industry? And basically, we're back to the question, is it a trend or is it a fad? Oh, gosh, this like we could ever sum up the world in one silly question. But we're going to try to do it today, and we're going to do it through the data and the stats, which is why I bring on my guest today, senior researcher at Bloomberg's Intelligence. That is the entity that actually puts out the data, does the research, doesn't just talk about stuff maybe they're not even sure about, but they actually put out the data and the stats. Jen Bartashus from Bloomberg Intelligence. Thanks for being with me today.
Thanks, Elizabeth. It's great to be here.
Great to have you with me again. This is your second time on the Plant-Based Business Hour. So I really appreciate that. And just for all the listeners and the viewers here, we're going to try to do this kind of on a quarterly basis. Probably next time we'll be more in line with the earnings calls of companies like Beyond Meat and Oatly and Ingredion and others. But with the airing, if you will, of kind of a repurposing of is plant-based a fad or is it a trend? A recent video came out from the Bloomberg News side, and I thought maybe we'd go back to the OG of facts, which would be Jen Bartashus from Bloomberg Intelligence. So I'll just start straight away. Is the plant-based foods sector and plant-based meats perhaps in particular a fad or a trend?
It is not a fad. It is a nascent industry. And I think what people need to remember is that with an industry that's so small and still growing, there are going to be bumps up and down the road. And we're in a little bit of a turbulent time because we've been through a turbulent time. But we're still very optimistic about the long-term opportunity and growth potential for the industry. It may be a little bit slower than we originally thought it would be, but then we had a pandemic and we had supply chain issues and we had all kinds of things that sort of, influence consumer behavior. But on the long term, we still think that it's here to stay and it's going to continue to grow.
Mm-hmm. So let's put a finer point to that. I'll add that we've also had inflation, and basically they haven't called it officially yet, but we're in a recession, sort of. I mean, the job numbers are still good, but we are toying with enough to make everyone panicked and freaked out with a recession. So obviously some headwinds for all businesses, not just plant-based businesses, but all businesses. So if you still consider this a trend, what kind of numbers are you seeing from your research department for growth?
So when we look at what's been happening on a rolling 52-week basis, we use IRI scanner data, and that's what we look at very closely to measure how well this segment is doing in the United States. And so looking at it on a 52-week basis, plant-based sales are down 4% and volume is down 10%. And that is part of what's giving fuel to the naysayers, I guess we should say. Now that said, we actually do still expect that by the end of this calendar year, that's going to move up, and that we're going to see positive sales growth and either flat to very slight positive volume growth by the end of the year. And there are a couple of things that are really going to help support that. The first is we think that it looks like beef prices in terms of conventional beef are going to be going up. We're in a cycle of the beef production cycle where there's limited supply, and that generally means that prices are going to go up. And so for hamburger alternatives, like your Beyond Meats or your Impossibles, Conagra, their Gardein type products, that's actually good news, because one of the biggest drivers is price and price parity to conventional products. So higher beef prices is something that could actually be very good for the plant-based sector as we get to the second half of this year. And then secondly, we have an improving supply chain. That means that there's better distribution. That means that products that are in stores have better quality, better shelf life, so that when people see them, they can take them home and they last a little bit longer in the refrigerator. Those are things that when they look optically more appealing and it has a longer shelf life or date, expiration date, that is also, a driver for consumers when they're making their decisions in the store. So those are kind of the things that we're looking at. And we do think that trend is going to shift as we get towards the end of the year.
I want to dive into that. I'll just kind of round out some of the things that you're saying from the VegTech Invest Research Department. We see that ConAgra. So I know some folks might say, oh gosh, I really want to root for my Impossible Foods and Beyond Meat. And I do too. But when we look at somebody like ConAgra, a big player that has distribution channels, advertising dollars, manufacturing breadth and capability, we see that they're already at price parity. The products that they put out are really on par with meat in terms of price. And, who are we kidding? We're in inflationary times and tricky economic times. So price really is king. So, the closer we get to that, I believe Synthesis Capital says on their S-curve adoption diagram that we should be having price parity around 2026, 2027, maybe late 2025. So this is only going to put us into faster growth. But one more comment about the supply chain. I love everything that you say, that it lasts a little bit longer, but also that it's more reliable. So I find that with the supply chain issues, there's been some consistency issues.
Yes. So people can end up in the store intending to get, say, a burger, an alternative meat burger, and then they're just not there. And so having that consistency and getting back to what the CPG companies call their service levels, how complete are their orders and how capable are they of filling those orders? Even the biggest ones still aren't back to pre-pandemic levels. So you can imagine it's much harder for the smaller guys to be competitive in that way. So as the supply chain gets better, that's better for everybody, from the really big guys to the little guys as well.
And I think the rising meat prices, I've heard that that's going to last for several years. I've heard quotes of like 2 years.
It's about a 2-year cycle, because if you think about the amount of time it takes to build a cattle herd and how long the animals live before they're actually sent for slaughter, it's a multi-year process. And so the USDA is forecasting that beef production will be down for this year and heading into next year. And so, again, that should support beef prices, which actually is good for the plant-based food industry.
Yeah, that's wonderful. I'm going to go ahead and share my screen. Let's see if I can do it, people. Let's see if I can do it. I apologize, everybody. Let me just... I apologize. Let me share my screen. Okay, I want to bring up the Good Food Institute State of the Industry report that just came out, literally hot off the presses about an hour ago. To read this, I will have to put on my glasses, and I'm going to come back to this point in just a second. But first, I'd like to show you a chart that I think is really important. So Jen's talking about the price of beef specifically going up for, let's say, 2 years, and that price parity, or perhaps even better with plant-based meats, is going to be there in comparison to beef. So the number to look at here is the repeat rate. So what we saw during COVID-19 is a lot of people couldn't get meat. They decided to try plant-based meat for the first time. They were focused on their health. They went to Google. They figured out it's a healthier option, and they went to buy plant-based meats. Now, if you look at plant-based meat repeat ratio, you're getting 63% repeat rate. This again is out of the Good Food Institute State of the Industry report for 2022. 76% repeat purchase rate for plant-based milks. So I think that's very telling. So even if the beef prices come down after 2 years, a lot of people will have converted already. Jen, what do you think about that thought?
I would agree. I think that people have tried it, especially during the pandemic. We saw a spike in trial, and that repeat rate is really important. And I would say that 60-odd% is good, but it could definitely be better. And there are things that will help drive that. Most of these companies have come out with new formulations, improved taste. They're working on improving the nutritional profile. I think there's broader awareness now that kind of counters that perception that these are highly processed products. And I think I was having a conversation with Josh Tetrick of Eat Just the other day, and he put it in a very interesting way. He said, well, if you compare, it depends what you compare it to, and he said, if you're comparing it to a sweet potato, like a sweet potato is just a potato, like it's not a processed food. And so I think there is that misconception there that people are starting to understand a little bit better how these products are made, what the benefits are behind them, and that will help that repeat rate. But certainly also availability in store is going to help that repeat rate significantly.
Mm-hmm. And I think people's willingness to have lots of options, we talk about this all the time, but in the chip aisle, you've got so many options: fried, baked, salted, unsalted, whole grain, not, yellow, blue, triangle, square. Why can't you have these kind of options on your plate as I'll say protein consumer? Why can't you have plant-based one day that's really decadent, plant-based that's super veggie forward and clean? And, if you're going to go the meat route, then you're having meat another day. So I see as meat prices are so not just volatile, but susceptible to supply chain issues. And that's only going to increase with climate change. That the consumer is going to be more willing to be like, okay, it's not beef today, then it's, Beyond Meat or what have you. So I think that's interesting. Of course, congrats goes out to Josh Tetrick, who is the CEO of Eat Just Inc., which has Eat Just, the plant-based eggs, but it also has the cultivated meat company, Good Meat, which has received an FDA no questions asked letter. So congratulations to them. And I appreciate that the Bloomberg intelligence person talks about benchmarks. So it depends on what you compare it to. That's a classic financial perspective of, well, what's your benchmark? And perhaps some of the news articles really haven't taken that sort of holistic understanding to the argument in play. Okay, let me switch gears. You were talking about data from IRI, 52-week U.S. retail. Yes. What is the problem with that logic?
Well, I think it's a great indicator of where the mainstream consumer is in one respect. And I think that the thing that we all have to keep in mind is that because there's so much data available in the United States, it gets highly publicized, and people extrapolate that out to the world or to the greater, to the entire industry. And that's not always the best approach because it's not always fair. I think if you look at the GFI report, you can see that on a global basis, sales were up, volumes were up. So if they're going down in the US, that means they're up higher elsewhere in the world. And that demand is strong, and that there are consumers who are committed to the plant-based products around the world. And so I think one of the things that influences the market sometimes is they see headline numbers that are really U.S. generated numbers. And then they extrapolate out, oh, you know what, this is a fad, right? The numbers are off. But we don't have the same transparency of data around the world that we have in the United States. And so that to me is one of the really important things. There's very strong demand for these products in Europe. There's strong demand in Asia. And when you think about just government backing or government investment in this area, which kind of touches on what you started with in your opening about the Biden administration and the bio, the bio work, is that there's more engagement from an institutional level. And right now, there's more of that in Europe and more of that in Asia, where they're having those conversations and they're looking at food security more seriously. And so that's helping to drive consumer understanding, consumer interest, and investment in the space. And that investment then unlocks things like scale and manufacturing opportunities and distribution opportunities that we haven't yet really started to take advantage of in the United States.
Mm-hmm. Yeah, so much to unpack there. And I couldn't agree more. Just to look at the United States is really short-sighted here. We're not the leaders, really. UK, Germany, really Europe leading the way. And I do want to read that global paragraph from the Good Food Institute. But I think we need to, as you say, look at the entire world and take that into consideration. And also remember that these numbers, of course, are 2022 numbers, one of the worst economic times in history. So you're not going to see the benefit of, let's say, national investment, from different countries. It's not just the US that is taking note of this, it's also China and other places. That kind of, registering how that moves the needle for the investment that they're doing end of 2022, early 2023, you're just not going to see those numbers until 2024. But that's why people think there's an S curve, because it's the focus that we're doing now that's going to bring us the S curve adoption. I will come back to S curve adoption. But first, I want to read, as Jen highlighted, the executive summary from the Good Food Institute State of the Industry report for 2022. In 2022, the plant-based meat and seafood retail industry generated $6.1 billion in global sales, growing 8% by dollars and 5% by weight. Combined plant-based milk, cheese, and yogurt hit $21.6 billion on the global stage, up 7% from 2021 amid challenging macro and market conditions. So I think that's important to note, that globally, as you say, it's up. But there's another problem, I think, with the IRI data, and I almost wish it weren't quoted so often and so heavily as the only data source. It only covers the grocery store.
Correct. It does not cover food service. And that is an incredibly important part of this industry. And when even though we have had some economically challenging times, and they're probably going to continue for still a little bit, we have seen an uptake of plant-based in food service. And food service is much more than just restaurants. Restaurants are a huge thing that everybody thinks of automatically, but it also includes schools. It includes healthcare institutions, hospitals, nursing homes, the like. And then there are other industry players like airlines. I was on a flight not that long ago, and they served Beyond meatballs as one of the entree choices on the airplane. So all of those food service type of areas are critically important to the growth of the industry, because it's part of where people get exposure to some of these products. It's a place where they can try them with relative safety. And then it helps form an opinion of what these products are capable of and how satisfying they can be.
Mm-hmm. For me, what's important there is when we say that the IRI numbers are US only, and global numbers would be an addition to, and then you'd average it out. So that is great to understand. But when you look at food service numbers, for me, what it tells me is that as people go back to university, or they're in hospital, or they're eating at their corporate cafeteria, or they're going out with friends to restaurants after work, now that everyone's back at work, it cannibalizes a little bit the fresh section of the IRI data, because why buy something in your refrigerator that might go to waste because you don't know the next time you're going to be out at a restaurant? So I see that is really telling a larger story, such that the grocery store numbers aren't really accurate. Because if you look at the grocery store numbers, you would think, oh, people are changing their behavior. They tried it and now they're not going to try it again. And it's just not accurate. They're trying it in a way that they know the chef is going to get it right, and they don't have to figure it out themselves.
And it's funny because if you think about conventional proteins, and because we were talking about beef prices earlier, when beef prices go up, people go out to steakhouses more often, because if you're going to actually spend money for a quality piece of protein, they want somebody who knows how to cook it and get it right. They don't want to risk messing it up or risk ruining it. And so some of that applies on the plant-based side too. If there's a product you're not quite sure how to prepare, or you're not quite sure what you're going to do with it, sometimes it is easier to get it at food service. I will say that the positive thing, and I would agree with you, Elizabeth, that there's certainly a little bit of cannibalization in that retail number. But the good thing is that at this point, especially because of the economy at the moment, people still have more eating at home occasions than they did before the pandemic. So it's slowly starting to shift, a little bit back to where we were, but we're still not at pre-pandemic levels. So the good news in there is that there's still a little bit more at-home preparation happening than before the pandemic hit. So
yeah, I think a powerful mover here is to have an educated and empowered consumer. So prior to COVID, a large multinational, let's say Nestle, would just kind of tell you what to eat and you ate it. You didn't really question these things like we do today. And when people let their fingers do the walking on Google, they find the answers that are right for their own health. And
yeah.
just a little bit of digging, you can find the right studies and you can see the cleaner label products coming out. So for me, it's exciting to see, again, I'll just use Beyond Meat here, but there's obviously others, that innovation that's coming. So
Yes.
the animal agriculture innovation curve is done, but the early innovation curve is just begun for this nascent sector. And so 3 years ago, what used to be maybe not the cleanest label on the planet, although good, now better than meat, let's say, now you've got a cleaner hamburger and still that decadent choice. Is it 100% there yet? Not quite. It's going to still nail that taste, but they've even moved into like super clean label on their steak products, steak tip products.
Exactly.
So I think that innovation is going to be really exciting to watch. And on a macro scale, I think that innovation is going to drive job growth. So this isn't fair. I didn't tell you that we would talk about this. And so if you're not prepared to talk about it, let's book you and we can talk about it again later. But when I look at the Fred numbers, I don't know if you ever look at Fred research, like Federal Economic, it's a super macro geeky thing. I see that there's a lot of investment happening in like bringing chip manufacturing back to the United States. It's kind of a geopolitical issue.
Yeah.
I think alternative proteins is going to be one of these national security investments that we focus on building the IP, building the jobs, building the knowledge, building the food security. I'm off on a tangent, but what do you think about that crazy thought that we might follow the chip investment for national investment in production?
Well, I think it's something that is important to people, and I think that's part of why you've seen the Biden administration actually take a stance on some of this. Is that there's recognition that food security is not a given, and there are some countries out there who are, it's much more difficult. So if you think about Singapore, right, they have to import so much of their own food. They don't have the space to dedicate to traditional agriculture. So their food security is a big issue. People tend to think that the United States doesn't have food security issues, but that's really not the case. And so, much like, bringing, onshoring critical components for batteries or for cars or for phones or for, the technology that keeps us moving and connected, having that food security is something that I think is on the minds of our politicians and certainly on the minds of some of our innovators. And when you're looking at companies that are at the stage where they're starting to ramp up production or starting to look at creating manufacturing facilities for future food technology, like the cultivated meats, there's a lot of opportunity to start thinking about long term. We're talking a decade down the road, but of having your food actually produced in local communities versus in big centers that then get shipped all across the country. So there's a lot of potential opportunity there and ways to actually make our food system much more functional and much lower cost, even though it's already lower cost than much of the rest of the world. But by decreasing transportation costs and packaging, there are so many opportunities there that I think that it is something that is important to the growth in the United States and can create a microeconomy for jobs and for growth.
And I love this because what it does is it brings back jobs and economic growth to rural communities. And I think it puts the power back into farmers when you start to see, like, rural University of Illinois, for example, big our agricultural university, now that play between the IP of the university and the manufacturing potential and job growth of the community staying therein, I think it empowers the farmers and will just further job growth. And then you're looking at larger GDP, et cetera. So I think that's very exciting. Maybe I should bring on the S curve, which I love to talk about on this show, from Synthesis Capital. We probably even talked about it last time, but last time you and I spoke was December. The world has changed since December. So let me show Synthesis Capital's S curve. This research was done by Catherine Tubb, who's also one of the original writers of the Rethink X paper about how our global food supply system is going to shift. I wonder if you could comment on the timeline of this. I just want to make sure that everybody can see it. Let me make a change here so that we can see this in full. What do you think about this timeline, which basically has, and we're seeing it now, slower growth around 2023, 2024, and then we start to take off come 2025? What do you think?
I think that this is a good time frame. 2023 to me is a reset. We're continuing to see some innovation, but we still have lingering issues going into 2024. It depends a little bit on a recession. So, I think 2025 is a good benchmark right now for things starting to take off. It may push a little towards 2026, depending on if we go into a deep recession and how long that lasts. But the things that are needed to move the industry up that S curve are happening. They're just not necessarily being recognized in the news. And so investments in manufacturing, investments in procurement, there's scale that's starting to build so that costs come down, that make it more affordable for consumers. The understanding of what these products are is growing. All of those things contribute to where that S really starts to take off.
Mm-hmm. And another nod that I've seen from industry in terms of that supply chain and infrastructure investment, I'm seeing more and more co-manufacturing options come online for plant-based meats and plant-based foods, and some of them quite significant. So Purdue University just ramping up an alternative proteins production facility, and they serve the university and their innovation there. Obviously, large agricultural university, but they also serve outside players. So it's wonderful to see that kind of investment come online, really.
It is. And I think there's an interesting choice that companies in this space are going to need to make, and that's the build versus buy. And that's always a challenge for any business. But when it comes to manufacturing capacity, what we've seen is that right now, buy tends to be the better option. Because if you look at Beyond Meat and you look at Oatly, both of them have had manufacturing issues in the last year and a half. Oatly has just kind of restructured their manufacturing footprint so that they're relying more heavily on co-manufacturers instead of building facilities strictly for their own use. And I think that that's the path we're going to see more companies follow, at least in the short term, because there's really pressure on these companies to show a clear path to profitability. And one of the ways you do that is by containing your costs. So now is not the time for big CapEx projects where you're going to be building big manufacturing facilities for future demand. It makes much more financial sense right now to work with co-manufacturers and expand as you need it in terms of your capacity. So that's one of the trends that we're seeing.
Mm-hmm. So much to unpack there. I think previously a lot of that capital investment was put into building because there weren't co-manufacturing options. So now that we see more co-manufacturers coming online, you're not forced to do that investment for yourself. We saw, I think it was Good Catch build out a very large facility, and that maybe did or did not work for them. Oatly giving back the keys, if you will, to a facility that they bought. So I understand that pressure there. For me, it makes sense to build when you're at a certain size. And
Correct.
so a little bit too small yet to be doing our own building, but ultimately there will be a switch there, and we will start doing that building when we have the size. I love what you're saying I love and I don't love what you're saying. I hear you say path to profitability and that
Yes.
pressure to show that you are profitable and you're not just spending on the future, but you're starting to realize some of your investments and really put numbers on the board, so to speak.
Yeah.
Is that short-sighted? I mean, economies can be very flippant. One day you're all about like growth, spend at all cost. I'm talking about venture at the moment. And then the next day you're like, oh my God, where's the profitability? So what do you think about that?
Yeah. I think it's not about how fast you hit profitability. It's about being able to articulate and show that there is a path to profitability. So it doesn't mean that they need to be there tomorrow. It means that investors need to understand that companies have the right management team and the right strategies in place to balance innovation and growth against the actual operational needs of the business, and doing that, like figuring out how to optimize and be efficient in your business at every level, so that as you gain scale, that you continue to take advantage of that scale, but that you're always seeking it regardless of your size. And so, I think part of the issue we've seen with the very few publicly traded companies we have, is that it's been heavy investment in future, and almost at any cost. And when that didn't immediately translate to perpetually growing sales and perpetually growing volumes and perpetually bigger partnership deals, investors got nervous, and so then they started to exert some pressure. But again, I think it's more important that people understand what that path is. So if you take a traditional packaged food company, if they go into a turnaround plan, it's always a multi-year plan, right? They don't turn around a company in a day, right? You're not going to achieve profitability in a year, but it's about what is the strategy, what is the path, and how well do you believe the management team will take you down that path. Now, both Oatly and Beyond Meat have articulated goals about being cash flow positive later this year. And if they're able to nudge in that direction, that should provide some reassurance that companies are at this stage of evolution are able to help balance that innovation along with the actual practicality of operations.
Mm-hmm. I love what you say. I just reiterating a couple things. This is one of the reasons why I like investing in the public markets. I have invested in venture before. It's fun and it's exciting, but there's just not the focus on running the business as much as there's a focus on the next big idea. And so I like that the public markets, and this is why I invest there, have just really put the pressure on the founders and kind of vetted the business model more wholly, if I can say that. And my hat's off to the early players who went public, who had to navigate really confusing signals. So in COVID, we thought that like meat was, I exaggerate to make a point, but it was almost day to night, meat was dead and plant-based was the answer. And then to manage a business equation around that extreme turn is very difficult. And then when everyone goes back to work, it's like, okay, now there's some hybrid, more flexitarian viewpoints, so demand down off an enormous high, although still up overall. You can see that from the Good Food Institute State of the Industry report, something like 47%. And I'll look it up in a second, 40 growth over 3 years. So tremendous growth. But if you look at the high of 2021, 2022 is going to compare poorly against that. Anyways, all this is to say it's very difficult to navigate those kind of extreme volatile movements. So hats off to the companies trying to do that. Maybe we could get your perspective, because most people don't, at least the people listening to this podcast, don't always get exposure to an analyst's perspective. So if they hear that, analysts have been hard on Oatly or Beyond Meat, they may not understand why. And I love that you're explaining to people that they're just looking for that reasonability, that logical path to profitability. May or may not have it today, but can you show the roadmap? Am I oversimplifying?
No, I think that's accurate. I mean, if you think about other sectors, when Beyond Meat IPO'd, it was considered a tech stock, not a food stock, right? And so it behaved more like a tech stock, where investors weren't that concerned with profit, and they were concerned about innovation and IP and and excitement and generating change in an industry. But then all of a sudden, people went, "Oh, wait! But if I'm managing a portfolio and I have to have exposure to consumer stocks, this is actually a consumer stock. This isn't a tech stock." And so what kind of happened is that for Beyond Meat especially, people kind of went, "Oh, well, we can't really consider it a tech stock, and now we need to consider it a food stock." And if you think about the big CPG companies, these are big companies that have stable growth, stable earnings growth. They have dividends. They're predictable, they're consistent, and so Beyond Meat doesn't fit into that mold. And I'm not saying they should fit into that mold, but that's part of where that disconnect happened from an investor perspective.
Mm-hmm. So they've been recategorized, so to speak, into more of a consumer staples, which of course it always
Informally.
was.
Yeah.
Yes, right. Yeah. But I have a question for you. We at VegTech Invest really see that we are, for lack of a better expression, launching a completely new impact asset class, and that it's not a true consumer staple and it's not tech, it's VegTech. So what do you think about that? That this will, the Beyond Meats of the world and what we're doing at VegTech is creating a new sector altogether.
I would agree. And I think that it's a sector that is a blend, because you're looking at you're looking at the end product part, you're looking at the agricultural production part, you're looking at the middle, the supply chain part, and all of that together needs to be considered when you're looking at this as kind of a new industry and how you evaluate the companies in this industry. The challenge is that it's new. And so it takes time for investors to understand why a separate categorization or a new type of categorization is warranted and what the benefits and the growth potential are. But I do think that companies like Beyond Meat, like Oatly, like Ingredion, even to a lesser degree, Kellogg with Morningstar Farms, what they've decided to keep. These are all entities or parts of entities that need to be thought of in a slightly different way.
You opened the door for me, so I'm going to once again try to share my screen. Oh, come on. Let's see if I can do it, people. Let me share my screen. Hopefully you can see this. And that's going to be the wrong thing. Okay, so I'm going to stop sharing my screen and see if maybe I'll ask you a question that you can have a long, slow, drawn-out answer to, so that I can find the right thing that I'd like to bring on. What I'm trying to get to is, you bring up some great points. Ingredion, not a small player, not a startup by any means. They've been around for 100 years, very much legacy consumer staples, if you will, and acting that way in its stock price and how it moves through the world, meaning not super volatile, not like a tech stock at all. Kellogg, I would say the same thing, clearly consumer staples and going around this kind of slow way of moving through the world. Givaudan, really focused on plant-based, bringing out those flavors and textures, at least 100 years old and a long time player. I think a misconception is that venture might be all startups, but when you start investing in the more stable, believe it or not, given the economy doesn't seem stable, but the more stable, let's say, public markets, you see that it's actually a lot of large cap, mid cap, and small cap players. So it's not like just startups, but it's some big major players.
Yeah, and I mean, it's about understanding what these big companies hold in their portfolio, right? So, I mean, you've got Tyson; they have a plant-based portfolio. You have Nestle that has a plant-based portfolio. JBS has a plant-based portfolio. Kellogg has Morningstar Farms. Conagra has Gardein. You could go on and talking about these big companies. Kraft Heinz has Boca. I mean. And they've got the Knot Company, partnership. And so It's about understanding what's in their portfolio, how serious are they about what's in their portfolio, and then what the growth prospects are, and taking advantage of the stability of the parent and still being able to enjoy some of the growth of the newer part of the business.
Sorry, everyone, doing my best with sharing a screen, but just to illustrate what Jen is talking about, if you see here and you're looking, this would be the VegTech Invest benchmark index called EATVI. You're going to have to pull out your glasses like I just did and really get in close to the screen. But where my cursor is, you see that large caps are about 18%, mid cap firms, I believe that says 46% of my eyes, my God. And then small cap, which would be, 2 billion or so in weighted market cap. I know these are terms maybe not everyone's familiar with, but still not small cap, it's 2 billion, would be around 35%. So just to show you, and also around the world, if you look at here where my cursor is, this universe of stocks, so this benchmark index for the sector, you're seeing 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, about 15 countries represented in this index. So very much a global movement and very much a mid-cap kind of movement. So very established companies that are decent in size. Have I summarized that, Jen?
Yeah, that's great. And I think it's just an important perspective to maintain, is that, I follow Beyond Meat and I follow Oatly, and they get a lot of headlines, but they're by no means the only players in this industry. And so, what happens to those may be more visible, but but there are a lot of other companies out there that are participating in this space as well.
Mm-hmm. Yeah, just to underscore what Jen was saying and what I was showing. Yeah, so you're looking at globally, the universe is probably around 90 companies. And then we at VegTech Invest really take from that universe and we figure out what we want to do on our end. And it becomes a much smaller, tighter, kind of the best of the 90. But, 90 companies. And so it's not just the one or two players as people might think. But let's talk about another player. You mentioned Kellogg. So I think it was, in 2020, Kellogg said it was going to spin off its business. It was going to spin off snacks. It was going to keep cereal, and it was going to spin off plant-based. And I kind of saw it as cereal was the past, snacks was the present, and plant-based was the future. Now they've decided to hold on to plant-based and not sell that part of their business, primarily that Morningstar business. Why do you think that is? What do you think about that?
Well, at the end of the day, it's probably because of valuation. And if they, because they were talking about either selling Morningstar Farms or spinning it into its own company. And the peers that we were just talking about in the public market, the pure play peers are Beyond Meat and to a lesser degree Oatly, because that's on the oat milk side. And so I think the perception of the market's receptivity to a pure play Morningstar Farms company is lukewarm at the moment. And so that was, because of valuation, they probably opted to keep it with the snacks company, which is their growth engine. As you said, Elizabeth, cereal is kind of the past. That's going to be a separate company. It's going to continue. And it'll focus on cereal and that sort of thing. The snacks is where they see growth. And I think plant-based, they're still very bullish about plant-based, but they're not as bullish that it could and should be its own company at this point. I think they'll reserve the opportunity to continue to evaluate that for a good opportunity in the future.
100%. My prediction there is very much in line with yours, that they're holding on to that till they can get the bigger dollars for it. And in a bad economy, no one's getting big dollars for anything. So why do that to yourself? But I do think that'll be on the block back for sale come 2026 or so. We're going to have here's my prediction. And of course, what we really want to hear is Jen's prediction. When we come out of our bad market economy, be prepared to stay here for a solid year. People, in my opinion, this is only predictions. Nobody knows the future, only my predictions. But when we come out of that, we'll be coming into plant-based innovation at the very same time, because our food issues are reaching a critical point of no return. Look at the cover of Bloomberg.com today. It's all about water rights, water investing, water shortages. that's related to agriculture in a major way. So the levers for concern about our global food supply system are going to heighten. There's going to be all this investment into plant-based at the same time that we come out of a bad economy. So hold on to your bootstraps, people. Let's have this conversation again in a solid 12 months to 18 months. Jen, what do you think?
I would agree. I think that 12 to 18 months we'll see, especially the plant side, start to accelerate. And I do think also complementing that at the same time, we're going to start seeing the first real commercialization of cultivated products that will start to be, more widely available. So we've got great news, from Upside Foods. We've got great news from Just Eat that, they've got FDA no questions status. They still have to go through the USDA part of it. But I think that we're going to see the continued growth of companies like Perfect Day that are creating animal-free dairy proteins. We're going to continue to see growth in that fermented product process. And those products are all going to be coming in, are starting to be commercialized at that same time. So to me, that's just another catalyst that will happen around that same time as plant-based that will help that S curve, as we were talking about earlier.
Mm-hmm, mm-hmm. And I think there'll be excitement about plant-based in the public markets with IPOs come end of 2025. So just hold on, that excitement is coming back. And I think, go ahead.
Oh, I was going to say, realistically, companies that have been growing and they've had venture capital behind them are going to need an exit strategy. And in some instances, that exit is starting to approach. And so that 2025, 2026 timeframe is where we may see, an uptick in those IPOs coming out of the plant-based space.
Mm-hmm. I think we will look back in a year and a half and we will say, like, can't believe anybody even asked if this was a trend or a fad. Like, what a ridiculous question. I usually end my interviews on what do you wish you knew 10 years ago? And what's your favorite phrase? And what's your favorite snack? But Jen has been with us today, not really feeling well. And she did the interview anyway. So I am cutting that out. And I would like to say, if you want the answer to all those questions, I did interview Jen in December of 2022. So go ahead and find that on the iTunes or wherever you get your podcasts. Her answers to those questions are there. Jen, you're a wealth of knowledge. I always love to talk to you.
Thank you so much, Elizabeth. Love being here.
Oh, you're so wonderful. Jen, don't go anywhere. Everybody else on Facebook, LinkedIn, YouTube, and Twitter. This has been a good one, right? You want to know the stats and the data. And that is Jen Bartashus. I will see everybody next week. Thank you all for all you